Welcome to this webinar sponsored by CustomizedTrading.com. We're going to talk about a very powerful edge for your trading. And even though we're showing this on a Forex chart, understand that it works the same in futures and stocks as well. We're looking at the RSI, which is a very well-known indicator for the degree of overbought, oversold. So when you see a move to the top side, that's classic that it's supposed to be overbought and turn the other direction. Now, when you look at it down here, this is a lot of lines and it may look like nonsense, but what I'm going to show you here is that this is the RSI from the chart, which is the 5-minute, also the 10-minute, the 20, the 30, the 60, the 120, the 240, and the daily. So we're looking at the RSI from a lot of different time frames. Now, what that tells us is that it's overbought in a lot of time frames because it's in the upper part of this range and in a lot of time frames. So when you get this extreme, it's not surprising that that's a great reversal point. That this is just telling you, it's no different than these peaks. Whereas this one is giving you a lot more information and oh, no, this is very significant. So you go short. Now, this line is exactly the same as this line right here. You can see it here. Now when it takes a big jump to the top side and it stops right at the 120-minute and turns over, if we line that up right there on that bar, it's already headed down. But now you know that it's headed down back into this downward trend because this is all, see how this is all turning red? So you're gone from an upward trend here to a downward trend. That's a pullback. And you have a low risk entry and get into that trade right here back to the downside. Now you can look at this as we go along here. When you have these big pullbacks, those are opportunities, like right here, another opportunity to get into the trade to the downside. Okay? Now you have several time frames going up. So you have to be careful about making too quick of a decision. You have to wait till you get for example, here you have a higher price, but you have a lower indicator. That's a divergence. And as these multiple time frames start turning over, there's a good re-entry into the downtrend. So you're using the multiple time frame edge to read this indicator in a more powerful way. Now, when you get all of these starting to consolidate down here, then you're starting to get oversold on a lot of time frames. But you have to be careful because something can trend for a while. That's the problem with these single time frames. They can give you a lot of false indicators. But when you start looking on it across multiple time frames, it helps you to not jump the gun and wait till this really does form a bottom. So now here, see how extreme this is? All of these lines are clear down below the extreme. This is the bottom, okay? And you can see here, all this does is it doesn't show any difference between this one, this one, this one, this one. They all look the same. But this looks very powerful, that it's a powerful bottom because of so many time frames are involved. Now it comes down and you get the same price, but you don't get the same look here. That's a divergence. Now you have a powerful signal to go long. And when you go along here on this divergence, let it play out. See, look at that trade. Now you had a powerful move to the upside. And now it's starting to get weak. So, you go ahead and take your profits. But that's the importance of multiple time frame edge. Now, as I said, there's lots of information available on that website, and its link, that URL in the description down below, will take you to the website where you can see lots of information about the multiple time frame, the powerful edge that it is, other types of multiple time frame indicators. Thank you for joining us for this webinar.